Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So realize, if you're trading spot right now, you probably are looking at many opportunities where you would be probably better or just as well suited to grab an option, either simultaneously, okay, or instead of. You could supplement your position with an option or supplant it even with an option. So it doesn't always have to be an either-or scenario. There are many times that I will find, and this is a perfect example of that, when the market is consolidating up here, on this time frame, on the daily time frame of the euro-US dollar, I do not have one of my setups really occurring up here. But I know, every one of us has a strategy or have strategies that we employ right now. But we know that they're not always giving us a trading opportunity. That's another time I love employing options. So we jump back over to the EUI here. As that euro-US dollar was consolidating up there, I knew, as it was trading around 3,500 below this 200-period simple moving average, that I really didn't want to get long here. I really wanted to try and pick a top, because in terms of the trades that I would trigger off on that daily chart of the euro-US dollar, I was really looking at a swing opportunity. I wouldn't mind being long, but it had to be after a correction. Well, I wasn't looking at a correction as the market was really clustering and getting consolidated. So an option was the perfect thing for me to shop for. And as the euro-US dollar was consolidating just above 3,500, the EUI was consolidating just below 74. You can see that right now. This is when I went ahead, trying to capitalize on the top on the euro-US dollar, understanding the relationship is inverse. I was actually shopping call options here on the EUI. Okay? I was actually employing a little bit of some top picking. I knew the market was getting a little quiet, a little range bound, volatility was coming down. I knew that I wanted to capitalize on a correction, but I didn't have a opportunity or a setup on the spot side of things. So a lot of times here, my friends, you're going to know that your strategy is just not, we all have a collection of strategies, and there are plenty of market moves that we know we'd like to take advantage of, but we don't have a setup. How often have we seen that? I know everybody here, if they're using their strategies properly, and I don't know, we could have Fibonacci traders here in this room, Elliott wave traders in this room, chart pattern traders like myself in this room, using support and resistance, that's what I like to do. The psychology of numbers, again, that's what I like to do. Using programs like the auto chart artists that look for different types of patterns for me. Those are things that I like to do. But I realize that I may not have a setup right now, that I might need to act a little bit more aggressively. So what's better? What could be better than grabbing a tool, grabbing a vehicle that allows me to get into a limited risk or a known risk scenario? Known risks are hard to come by in the Forex side of things. We know that because of the volatility and the economic events that can happen. So having an absolute known risk and top picking, which is relatively aggressive, I'm able to take advantage of that small cluster of consolidation. Now you could have done the same thing probably in a 30 or 60-minute chart if you're a very aggressive trader, but for me, my favorite time frame to trade options off of are the daily time frames. So I'm going to look for those consolidations and congestions in those quiet times most frequently on the daily chart. So what happened there is I shopped around for some call options. Again, looking at now the EUI, that same consolidation I saw at 3,500 or just above 3,500, here below 74, and you can see what happened. The move that I wanted to see on the euro-US dollar lower finally exploded up higher. And those are the types of opportunities, and this one just happened, okay? Those are precisely the kind of opportunities that I look to capitalize on. This is just one example. Let's take a look at some other time frames, and one of the ones that I've been trading a lot has been the YUK. Let me show you the underlying chart, which is the dollar-yen. Some of the most, if someone's looking at asking or wondering what some of the more popular pairs are, well, you've got all the majors really covered with the ISE options. I mean, sure, there are a lot of cross rates. But let me tell you something. Most of the cross rates, some of the commodity currencies, and the majors, there's a lot of pairs, but a lot of them aren't that heavily traded. There's a wide spread, which increases your cost per trade. There's a lot of volatility that can occur and widen that spread. One of the advantages you have here is you've got a very fine-tuned list here of the most popularly traded Forex pairs in terms of the options. So your EUI is going to represent your Euro-US dollar, which I'm sure Steve mentioned is one of the more popular pairs to trade, and therefore is one of my favorite options to trade. The cable, the British pound US dollar, which would translate to the BPX here as the US dollar British pound. The BPX is another popular one. I'd say by and large, those two are going to be the most popular ones. But I got to tell you, right now the CDD, which is the US dollar Canadian dollar, the CDD right now is a very popular pair to trade, and we'll take a look at that as well. Because crude oil is moving right now, my friends. I'm sure many of you saw that crude oil broke down through $50. So the CDD was another pair that I've been trading actively over the past, 4 or 5 sessions. Okay? Another popular pair, and I'm gonna talk about these correlations a little bit, because you notice that we're going back and forth between the spot and the chart of the option, but I'm also going to talk about some of the underlying movement that's moving pairs like the Euro-US dollar and the British pound US dollar, and then is therefore giving me opportunities on the EUI and BPX. And the dollar has been moving again, the US dollar index, which you see on your screen right now, or should. That one's been moving again, and that's absolutely going to affect what you see on the EUI and BPX. Let me show you the chart of the US dollar index, which is a futures contract, overlaid with the EUI. Do a quick overlay here. And I'm just going to turn these into a dark color again, just like we did before. And there you go. Take a look at this movement. When the EUI is moving, do you think there's some correlation to the dollar index? Most of you that are trading spot Forex know that you have to understand, even in a basic way, what the dollar is doing, what the US dollar is doing against the other pairs. Well, take a look. If I've got a day where I know the US dollar index is moving, you think that there's going to be some opportunity possibly brewing on the EUI? What about if I'm looking at the dollar index and the BPX? Take a look at that relationship. So now I'm overlaying the dollar index and the option symbols. Take a look. Not as tight a correlation as the EUI, was it? But there's definitely a sympathetic correlation, right? Okay, so when I get to a pair like, for example, the dollar yen. Let's take a look at that here. I get to a pair like the dollar yen, which has a very good correlation back to the Dow. I know a lot of you have been probably hearing a lot about risk appetite and risk aversion and things of that nature. There is a terrific correlation between what happens in the dollar yen and what happens in the Dow. Okay, dollar yen and equities have a relationship, and you take a look at this relationship, and I'm sure everybody here has been watching what the Dow has been doing. Okay, and you take a look at the relationship here. You can see more or less it's sympathetic, although it does get inverse in terms of its relationship. It's more or less a sympathetic relationship. Okay, so I know more or less, not all the time, correlation should not be the primary consideration, but certainly understanding the impact that these correlations can have on the underlying market, and then therefore the symbols that I'm looking to capitalize on the options for. I know that right now what's happening on the dollar yen is influenced by the Dow, but I also know that my dollar yen is approaching the 200-period simple moving average.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.